Despite a record wave of COVID-19 cases, the U.S. added back a surprisingly strong 467,000 new jobs in January, performing much better than experts were expecting in a report that's likely to justify the Federal Reserve's aggressive tightening measures, a potentially bad sign for the already struck. There can be no doubt that the notion of inflation at 2% is a much more elusive goal at this point, he noted. Fed officials will dissect this month's jobs report before their next policy meeting in mid-March, when they're expected to embark on an interest rate hiking cycle to combat a decades-high surge in inflation, Hamrick says. Following the report, LPL financial analyst Barry Gilbert said the Fed is now likely to raise rates 4 more times this year, compared to the 3 interest rate hikes officials projected late last year. The waning COVID-19 infections helped usher in a streak of promising labor market developments in the fall, a recent uptick in cases, spurred by the highly contagious Omicron variant, coincided with a disappointing jobs report for November and December, with the United States adding less than half. In light of the COVID surge, the White House started warning the jobs data could be disappointing late last month. If you think about Omicron in early January, and the impact it was having in terms of the number of people who are out sick, we do expect there to be some real variation in the data, Brian Deese, President Joe Biden's top economic advisor, said last week, adding that Americans need to be prepared. While higher interest rates increase borrowing costs for all businesses, they also make firms' projected profits worth less in investors' valuation models. Nigel Green, the CEO of $12 billion wealth advisory DeVere Group, said in an email to Forbes last week. This is exacerbated for tech and other growth stocks whose peak earnings are not expected for years to come. Goldman Sachs chief economist Jan Hatzius expects the central bank will actually hike interest rates 4, or even 5, times this year, given the Fed's greater sense of urgency around